And welcome to this study circle meeting on quality control in an audit of financial statements. First of all, I will apologize for the 10 minutes delay. We were stuck in traffic and sorry for the delay. So today we have Shristi Sarayan to address us on this matter. I request our chairman Pramod Dharegde to escort her to the dais and greet her. Welcome to you. Please take a seat. Request chairman to give the welcome address.
Good evening, members. Well, happy to see a very good crowd during audit session, because we always say GST and other sessions take quite a lot of attention than audit. And today's session is very close to my heart, one being the domain which I am in, and secondly, our profession is a profession of audit. So when the issue and the standards on auditing is what we are given, is what I proudly say. So that's the reason this topic is more closer than the domain aspects of it. I thank Shristi Sarayan for, even at the last moment she did accept my invitation and she was happy to deliver a lecture on SA 220. When we talk about the quality and control, it's very essence in current regulatory standards, because everyone is looking on us. Most of the times, even our clients ask, who audits you? So probably they would have asked in a financial sense, but if you look at the intricacies of it, maintaining the quality becomes very essential. And considering the diversified audit team and the performance and audit, the quality control is very critical for at a firm level for the audit practitioners as well. In the regulatory concept, and if you look at a lot of regulatory requirements, they are also questioning the documentation of such quality control which has been there in the firm, and also at an engagement level, how this quality control has been evidenced, documented, and that has been asked for documentation. Of late, I was talking to a few of my colleagues on this peer review. Even in peer review these days, even after the peer reviewer has reviewed, there's quite a lot of questions which has come back from the peer reviewer, from the peer review board, saying that how is this demonstrated, how is it documented, how has the peer reviewer seen this documentation. So in this essence, I thought this topic was very critical, and considering quite a lot of advancement in our profession with respect to mandatory AQMM standards and the peer review mandate which is there, I felt this was a very essential topic. So welcome all of you for this pivotal topic, and before I hand over the stage, I request our secretary to give a brief introduction. Thank you.
Thank you, Chairman. Shristi Sarayan is partner in True and Fair Professionals Network. She comes with over 12 years of professional experience in the financial accounting and auditing. In the financial accounting and audit and assurance. She was over the 12 years she had held senior positions in Big Four, one of the Big Fours in the audit and assurance practice. She has practical experience of working on various gaps, including India's gap, IFRS and all. She had fast-tracked her career when she was working with Big Four, and then she moved on to industry. And having experienced both the sides of table, she decided to venture into socio-economic cause of working towards enhancing capacity, capability and quality of audit firms, and improving the overall accounting and auditing ecosystem. Currently, she is working with as partner in True and Fair Professional Network. Ladies and gentlemen, it gives me immense pleasure to introduce Shristi Sarayan to you all, and welcome to you, Shristi. Thank you, and over to you.
Thank you, Chairman and Secretary, for the introduction. I know it's late evening and the session today is a bit heavy, covering the quality control in an audit of financial statements, but we try and make it interactive and keep the session, more interactive, so that it's not a boring session. So as you all know that quality control has been something which has been spoken not just by, it's looked at by the regulators, by the investors, and it's there in day-to-day news. So if you look at the various extracts from the newspapers, you will all notice that they have been talking about the quality review controls. They've been talking about client acceptance issues which has been noted in quality. They've been noting issues with regard to starting from client acceptance till your monitoring process of the archive files. There has been issues with regard to with regard to performance of the engagements. So if you look at the latest requirement, or the published from NAFRA, they've been talking that they'll be focusing more on quality control. And in this regard, they've started inspections. And the latest inspection reports, if you were to look at from NAFRA, they have been, significant observations with regard to quality, both at firm level as well as engagement level. Firm level is dealt by the SQCs, which we are not covering today. We are looking at more from engagement level, which is covered by SA 220. So, if you look at it, based on these inspections, what has been the result is, that the firms have been penalized, the engagement partners have been penalized, including quality control reviewers in certain cases. They have been penalized, they have been debarred. They have been asked not to do listed company audits. And hence it's very critical that we focus on audit quality, especially when we are talking about audit of financial statements. So when we are talking about SA 220, I would say it is more like a motherhood standard which covers everything of an engagement cycle, starting from client acceptance till monitoring of an archived file. It covers what the role of an engagement partner, role of an engagement team should be with regard to quality control. It also covers what the role of an EQCR should be, that is engagement quality control reviewer. How quality control should be looked at when you're doing your audit performance, when you're planning your audit, when you're executing your audit, when you're concluding your audit. And it also covers all these aspects which it covers. It focuses on the same elements which is spoken in SQC 1, which we are going to again cover in detail. So the only difference between SQC 1 elements and the requirements under this standard is human resources. That is what is not dealt in this standard. Other than that, all the 5 elements have been dealt in SQC 1. Again, if you look at the objective of SA 220, as I mentioned, it is focusing on quality control more from an engagement level. And hence, this enables the auditor to issue to get a reasonable assurance that the audit engagement was carried with in accordance with professional standards and in line with regulatory and legal requirements. How do we do that? We have, the firms will have various checklists in place, various formats in place. So if the engagement teams are following that consistently, that will ensure compliance with this particular standard. Then again, the auditor's report is appropriate in the circumstances. How do we ensure that? So your audit documentation in your audit file should be in such a way that it speaks the conclusion on its own. That means if anyone who is looking at your audit file should arrive at the same conclusion which you had arrived at, which has been a basic observation which has been noted in most of the inspections which has been carried out by NAFRA. They have noted that either there were not sufficient appropriate audit evidence which was available, or the audit procedures which were carried out by the firms were inadequate. And hence they could not reach similar conclusions. In certain cases it was noted that something which should have been qualified, they had actually carried it as an emphasis of matter paragraph, which was not appropriate. So these are some things which we need to keep in mind. Again, as I was mentioning that this particular standard SA 220, it is premised on SQC 1, which is applicable to all the firms, right? Again, as I mentioned, all the five, all the six elements are, all the five elements in this standard which we will be talking, it is in sync with what is there in SQC1. However, here what we will be discussing is more from an engagement, particular engagement, audit engagement per se, what you need to do, the documentation, what kind of procedures you need to follow, what kind of planning you need to follow. So the five elements which we are going to deal with today includes leadership responsibilities for quality on audit, relevant ethical requirements, acceptance and continuance of client relationship and engagement, audit engagements, engagement performance and monitoring. So based on various inspections which has been carried out, and if you look at the objective which is set out in SA 220, there is definitely a need for compliance. And how do we comply with this particular standard is very important, right? Because if you look at the various other standards which are there, be it audit planning, be it risk assessment, those have been, those are specific guidelines laid as to how do you do that, how do you send out external confirmation, what procedures do you carry out. Whereas when it comes to audit, quality control, this is one standard which gets ignored in terms of documentation, I would say. So this is what we are going to deal in today's session. Then how do we document all these five elements which we spoke in the earlier slide? So when we talk about leadership responsibilities for quality on audit, it is very important that the engagement partner who is signing off on the audit of financial statement, he understands his responsibility and takes action on delivering his responsibility, wherein he must communicate to all his engagement team members the importance of audit quality, on how he should be performing the work which is in compliance with the professional standards, the legal and regulatory requirements. How so he has to ensure that the team is actually following the various templates which the firm might have in place, the various policies and procedures which the firm has laid down. Again, the engagement partner is required to emphasize on compliance with the quality control policies and procedures of the firm. So if the firm has certain SPC policies, independence requirements which are there, those should be known to everyone within the engagement team, and it has to be emphasized upon. So that means when the engagement partner is having a planning discussion with his team members, he should emphasize on doing such certain activities which include these particular items. Again, as I was mentioning, the audit file should speak in itself, right? So that the conclusion which you as an auditor has reached, the same conclusion is reached by anyone who is reviewing the financial statements, and hence it is very important that that is also emphasized upon to each of the team members. Then again, there should be an environment within the team so that in case the team members have any queries, have any issues, they can raise such concerns to the seniors on the engagement, bring it up to the notice of the partners or the manager on the engagement, so that necessary audit procedures can be carried out. If nature, timing, extent of the procedures needs to be tailored, that can be carried out. Again, there might be larger firms who are carrying out audit of financial statements, especially listed entity audits, wherein they might have more than one partner on that engagement, and hence it is very important that you clearly call out what is the role and responsibility of the engagement partner and that other partner. It cannot be deemed that the role and responsibility, since you are a partner, the roles and responsibilities are same. It is not. The role and responsibility of engagement partner is clearly defined within this particular standard and various other standards, so that cannot be compromised upon, and hence that other partner is only helping him or providing an aid to him to carry out his responsibilities, but the engagement partner is not relieved of those responsibilities. In a lot of engagements, it is mandatory to carry out a quality control review, especially when you have a listed audit client and you are carrying out the audit of financial statements. Then you need to mandatorily have an engagement quality control reviewer, wherein they will be carrying out the quality check of the audit file and the deliverables before it is issued or signed off. So when that is being carried out, again, it is very important that they are timely appointed, or they are identified, I would say not appointed, but they are clearly identified at the start of the engagement. Then again, their work or the review is planned in advance, what they are going to review, when they are going to review, how the review would be carried out. All those things should be planned in advance, so that it can have there are no surprises towards the end of the signing of the audit reports. Again, it is very important to note that EQCR is not part of the engagement team. As I was mentioning in the earlier slide as well, wherein you would have seen the NAFRA reports, wherein they have penalized both the engagement partner and the quality reviewer, because engagement partner and quality reviewer have different roles to play. The role of an engagement quality control reviewer is defined under this particular standard, which again we will be dealing in detail in the later slides. Again, as I mentioned, the roles are different, so obviously engagement partner cannot rely on the work which is carried by EQCR. He has to independently carry out his review, and ideally the engagement partner has to carry out the review of financial statements first, and then the EQCR has to be carried out, because it's a quality check. It has to happen towards the end before sign off. So this is more from leadership perspective that you need to carry out and document in your audit files. When we talk about the second aspect of this particular standards requirement, it deals with relevant ethical requirements. So again, here what is important is that the engagement partner needs to perform sufficient inquiry with the engagement team with regard to compliance with the ethical requirements, both in respect of code of conduct and other such ethical requirements which may be applicable to the particular engagement. So again, he has to get a confirmation from each of the team members that there is no non-compliance, both at the start of the engagement as well as towards the end of the engagement. So, and in between, if there is any such non-compliances which comes up, the engagement team must inform the engagement partner that his independence is impaired. There might be a situation wherein, let's say, you have a team member whose parents have maybe joined the finance team of the engagement which he is auditing. So obviously his independence might get impaired. He might get influenced. So you might want to change that particular engagement team member. So these are the things which you need to factor in when you are looking at compliance with this particular standard. Again, when evaluating these independence and other regulatory ethical requirements, what usually happens is people do not focus on considering the relevant information which may be applicable from a network or the other firm's perspective, which also needs to get factored in. Again, if there is any breaches, as I was mentioning, which is noted with regard to, especially with regard to independence, if it's a larger firm, again it is the responsibility of the engagement partner to communicate it to the relevant person in the firm, that the independence of XYZ person has been impaired, or at the firm level if it is getting impaired, that also needs to get communicated so that appropriate action can be taken. If required, if they need to resign from that particular engagement, and appropriate action can be taken. So again, as I mentioned, specifically the standard requires that the final conclusion with regard to the compliance with regard to the ethical requirements, that it has been complied by all the team members, needs to get documented as per this particular standard. Third aspect which this particular standard deals with is acceptance and continuance of client engagement, client relationships and audit engagement. So again, this is in sync with SQC1, wherein before accepting in engagement with a new client or continuance of an existing client, or if you have a new engagement with an existing client, then you need to carry out all the relevant procedures which is defined under SQC1. Again, in this regard, you need to understand and gather all the relevant information which may be required when you are doing that particular engagement or when you're onboarding that new client. So you need to understand the entity, the laws and regulations that are applicable, the engagement that you're going to deliver, what are the, in which is the industry it is operating in, what are the risks associated with it, how you're going to mitigate it, whether you have sufficient staff or not. All those things needs to be evaluated before you onboard that particular audit engagement or the audit client. So again, the major issue which has been noted whenever these NAFRA inspections and other regulatory inspections has been carried out is with regard to the communication with with the predecessor auditors. So again, what happens is as per SQC 1, you are required to communicate with the predecessor auditor, especially in case of initial audit. You are supposed to carry out that particular inquiry with them in writing, and you need to give sufficient time to them to respond. So if you look at the latest inspection report, there was a case which was there in NAFRA's report wherein they had mentioned that the request for communication with predecessor auditor was only rolled out on the day of acceptance, and in fact audit work was carried out in such case before accepting the client, which again is not permitted as per your SQC 1. So if you look at SQC 1, it is very clearly stating that you need to communicate with the predecessor auditor in writing, and again giving him sufficient time to respond, and no audit work should be carried out before doing such communication. So this is something which we need to focus on. And again, what is usually observed that in case of previous auditor, people do not look at the audit report or the deliverables. If there was a presentation which was made to the audit committee or some comment which was there in the or if there was any comment which was made in the annual report, or there was any observation which was there in the public domain, with regard to that particular audit, those are not considered when the client is being accepted. So that is something which needs to be factored in, so that the auditor who is onboarding this new client can plan appropriate audit procedures to mitigate all such identified risks. In case there is any issue noted, maybe at the client acceptance stage, or maybe during the course of audit, if you come to know that there is a fraud or any issue which is there which might actually impact the overall firm's reputation, then you might want to resign from that engagement. And in this case, if it is a larger firm, then the engagement partner is responsible to communicate to the firm's relevant person who takes care of such regulatory matters. Again, what has been observed in these cases is, whenever there is an initial audit or a new client which is getting onboarded, the reasons for non-continuance or the non-appointment of the previous auditor is not considered. So you have these ADT filings which is available, right? So you can look at that, what was the reason submitted. You can ask for the extract of the board minutes wherein the resignation of the previous auditor was passed and your appointment was being considered, and you can look at the reasons which has been cited out. You can have a discussion with the previous auditor as to what was the reason, if that is not the exact reason what led them to resign, and accordingly factor it when you are doing your client acceptance, because if there is any significant risk, you may not want such a risky client onboarding. Again, a very crucial aspect, I would say, when it comes to auditors is the audit fee. So if the client is aggressive with regard to audit fee, right, we should evaluate whether we should accept such client or not. Because how is an audit fee determined, right? It is nothing but you will have your people cost. Significant chunk is your people cost, then you will have some admin cost to it. You will have the partner's share, and then you will have some amount factored in for your investment towards learning, development or innovation or tools that you are going to use. These are the 4 factors which are considered when you arrive at your audit fee, right? Now, if the client is reducing that audit fee which you wanted, what is the first thing which will get impacted? Definitely you will not be doing any investment towards learning or so forth. So your quality is getting directly impacted in a way. Second thing which will get impacted is nothing but your people cost. So you will not be able to get good people because you will not be in a position to pay higher salaries. So that is what will get impacted. So you need to evaluate and make the client understand that the fee is an important factor, and hence you might not be able to go to a much lower extent, because that is going to impact your quality of the audit. So again, this is specifically called out in the standards. So this is something which you need to factor in if you're going in. If the other auditor was at, let's say, X amount and you are going at X minus 10 or so, then you need to evaluate whether you are compromising on your quality or not, and that has to get documented in a way in your file. Again, engagement partner satisfaction, that he has the appropriate team members who has the necessary skill set to carry out the audit engagement is very important. If the skill sets is not available within the firm, they may want to evaluate whether they want to get certain experts from outside who would carry out certain audit procedures or help with that particular audit. So accordingly, such evaluation has to be carried out at the time of client acceptance, such new clients which you are accepting, or any complex engagement that you would have accepted. So if, let's say, if your client has gone into cryptocurrency in the current year, you may not have that particular skill set to do the audit of that particular section of cryptocurrency. So you may want to hire someone, or you may want some external firm to help you with that particular audit. Again, the competence of the engagement team, the experts, has to be up to that it should meet the satisfaction of the engagement partner, and it needs to get documented in your audit file that yes, they will be able to carry out a quality control audit as per the requirements of the standard. This is one larger piece, again, one of the 5 factors which we mentioned earlier, engagement performance, where a lot of observations has been noted, especially if you look at all the NAFRA inspection or the other inspections which has been carried out, maybe at PCOB level also. When you look at, this is where most of the issues are noted. So if you look at it, again we have defined it into 5 stages or pieces, I would say, that is direction, supervision and performance, reviews, consultation, EQCR and difference of opinion. So in case, how you will demonstrate these in your audit file is what we are going to discuss in the latest slides. So when we talk about direction, supervision and performance, so if you look at it, it is very important that the engagement team understands their roles and responsibilities when it comes to audit quality. What work they are going to do, how they are going to do the work, including like starting from how they are going to select any sample, which areas they are supposed to audit, how to select that area for audit, all such understanding has to be there, right? So how do you do that? Who will explain that to the team? Obviously, maybe the partner may not have that time or the bandwidth. So again, if the manager is doing it, whether any new team member who is joining, who will educate that particular team member, all such roles and responsibilities within the team needs to be defined, needs to be crystal clear. Who will perform the preliminary review, who will perform the final review, who will review the overall documentation in the file, who will ensure that all the documents which should have been considered, which has been obtained for audit purposes, has been considered and documented in the audit file. Whether the evidences and information which has been obtained is actually meeting the required requirements or not. So all such things needs to be factored in, and the roles and responsibilities of the engagement team needs to be communicated, and it should be understood by the engagement team. Again, it is very important that the engagement partner stresses upon the importance of professional skepticism. So if you would have seen the second slide which we had presented, right, again it had specifically called out, if you pick up any NAFRA report, definitely there's a mention of professional skepticism and professional judgment. So these are two areas where there is absolute observation from in almost all the files. So it's very important that we educate the teams that they must apply professional skepticism. We should discuss with the team members how they will apply professional skepticism. Now, nowadays we receive scanned copies in most of the cases, right? Scanned copies of documents. Now, how do you know that that particular document is actually authentic or not? So, whether the teams have been actually trained to evaluate that whether such documents are appropriate, not appropriate, all such activities needs to be carried out. That understanding has to be there with the team. Again, it is very important for the engagement partner to ensure that a culture is developed within the team, that their team members can raise questions. That is, if the least experienced team member has any queries or has any issues or comes across any observation, he should be able to raise such concerns to his seniors on the engagement so that those matters can be resolved on a timely manner. So that culture has to be developed within the engagement teams. Again, what is important is appropriate guidance and training should be provided to the engagement teams so that they understand what is the objective of the test that they are going to carry out. So it is very important that it is clearly understood by them that what, when, how they are testing and why they are testing things. So again, in this regard, it is not just that you give the training at a firm level. It has to be engagement specific training also. So for example, if you have certain issues which has been noted at that particular engagement in the past, maybe you may want the seniors on the engagement who had earlier audited, let's say if X person had audited revenue, now Y person is auditing revenue, and revenue was the revenue contracts were somehow complex in nature to interpret, then you may want that X person to explain the Y person that how he should go about interpreting such contracts, so that it becomes easier for him or her. So such kind of on-the-job training is very important, which needs to be planned. Again, the engagement team members should understand the business, the environment of the client which they are serving, the engagement which they are working on, the nuances of that particular engagement, which are the high risk areas, which are the low risk areas, what audit procedures they need to carry out, and so forth. So that, as I mentioned earlier, the objectives are clear and they are able to carry out the required audit procedures in that regard. Again, engagement teams needs to be informed of the detailed audit approach. That let's say whether you are planning to rely on controls, not rely on controls. For example, if it's a small private company audit which does not have an ICFR reporting, so you may want to evaluate whether it is efficient to rely on controls or not efficient. Whether you are planning to rely on previous year's controls, which is permitted as per ICFR, right? For low risk areas, you can rely on the work carried out, provided it meets those conditions. So again, all such evaluations should be discussed upfront by the team members. The approach should be crystal clear, how the materiality has been to be determined in particular engagement, what procedures, when to send out confirmation, when to not send out confirmation. All such things should be pre-discussed by the engagement partner with his team and agreed upon. Again, it is very important that the engagement partner or the seniors on the engagement monitor the progress of the audit, so that there is no delay in terms of the timelines that you might have communicated to your client, and there are not surprises towards the end. Again, I think we dealt with it earlier also, that the team members who are involved in that particular team, whether they are competent, whether they are capable to perform that audit, and whether they, the engagement partner must evaluate based on these competencies and capabilities, whether they will have sufficient time to carry out that particular audit. So for example, you have these listed company audits wherein the results gets published within 15 days, 10 days from the quarter close. How do these larger firms are doing such audits? Obviously, they have planned it in advance. They ensure that their team members have sufficient, experienced people who will be able to deliver. They start early. They start 1 month, 2 months in advance. They do interim audit, and hence they are able to deliver such shorter timeline audit. So it is very critical that we plan all such things in advance. We evaluate whether that bandwidth is available with the team. If additional people are required, how do you factor those things in is something which you need to plan in advance. Again, the team members should understand the instructions as we were discussing earlier. If they have not understood what you want, what is the expectation out of them, then they might not be able to deliver or the audit objective will not be able to be attained. And hence it is very critical that they understand the instructions and the procedures are performed in accordance to the planned approach. Again, if you have any significant matters which are arising during the course of the audit, which they come across, as we discussed earlier, there should be an environment wherein they are able to raise such concerns, and then so that the audit procedures can be modified, the nature, timing and extent can be modified to such extent. And if any matter is there which is required, which is complex in nature or contentious in nature and requires further consultation, then such matters should be identified upfront and in discussion with the senior members on the team. Especially, the involvement of engagement partner in such situation becomes very important. So the second aspect of engagement performance deals with review. So it is required that when the work is happening, simultaneous reviews are carried out. It shouldn't be that the engagement team goes for a month, carries out the work, the file is forgotten for another month, and the review is carried out post that. It shouldn't be like that. Review should be carried out simultaneously so that things can get closed. So you may want to plan with your team how, when, which work will come for your review, so that not everything gets filed towards the end of the audit. Again, it should be planned, as we were mentioning, if you have some larger team members, if you have a larger audit, if you have large team working on an engagement, you may want to plan who will review the work of maybe the article or the first year article, or who will guide him, so that not everything piles up and not many observations are noted that XYZ things are not carried out. So it's very important that we plan when, which, what will get reviewed, who will review it. Work should be reviewed at appropriate stages. So once you finish your client acceptance, you plan for the audit. You discuss it with your quality reviewer. In case it's a listed company audit, you discuss it upfront with your EPCR that this is the approach which we are following. In case he has any suggestions, you can incorporate that upfront rather than towards the end of the audit. So that is what is expected out of the standard. Again, significant matters, if it is there for consideration, if you based on your interaction with the client or any of your team member notices any issues, any fraud or any matter or one-time transaction which has been noted, then all such things can be factored upfront, planned upfront, and so that there is no delay in the completion of the audit. Again, there might be certain matters which requires consultation, so that needs to be planned ahead. And again, these matters for consultations needs to be taken up by the engagement partner, with, so that they can be closed appropriately. Again, whatever is the final conclusion out of such consultations, these consultations may be internal or external. We'll discuss it in the later slide. So whenever you're having such consultation on any complex matter, let's say if you have some complex derivative transactions in current year which was not there in the prior years, and you might want to involve some expert in that regard. So in case his work has to be reviewed, you have an EQCR who has that experience and you've involved that person to review that work of the expert, then you may want to plan it in advance, and whatever is the final conclusion reached has to be agreeable by the engagement partner with that person who has cleared that consultation. So both of them has to be in sync, and if any matter has to be communicated to the client, if the client had wrongly followed something, it's the partner's responsibility to make such communication to the client. It is not the responsibility of the party to whom you had consulted. So it is very important that the engagement partner's role in these regards is very critical and needs to be understood clearly. Again, based on these consultations or based on the reviews, if any nature, timing, extent or any procedure needs to be modified, that needs to be factored in and needs to be carried out. Again, whatever work is performed should support the conclusions reached. This is one of the, I would say repetitive observation based on NAFRA reports, wherein they have noted that, especially with regard to, I would say, going concern and related party transactions, wherein, the conclusions which has been reached by the auditors is not in sync with the work which has been performed by them. They have, in most of the cases, there has been reliance based on the third party reports, and in those cases mostly it is management reports. So ideally there was no work carried out by the auditor, which is not right. There is specific requirement that you as an auditor need to carry out certain procedures, need to be satisfied with that particular account balance before you sign off on the audit report. Again, evidence obtained by the engagement team needs to be sufficient and appropriate, right? So it's very important that the engagement partner is satisfied that all the appropriate and sufficient audit evidence has been obtained for all the areas. Again, objectives of whatever has been planned, right, or approach which was planned, the objectives should be achieved. That has to be ensured when the reviews are being performed. So if, let's say, we are talking about testing of cutoff, and if the testing procedure which has been carried out is actually addressing the accuracy assertion, it might not help. Because you were looking at whether right revenue has been booked in the correct period or not, whereas what the team has done is nothing but ensure that whatever revenue has been booked is correct. So that is not serving your objective. So these are the things which you need to focus on when you are carrying out your reviews. Again, engagement partner needs to be involved in at appropriate stages of the audit, so that all the critical areas which are there, so any area which is fraud risk area, significant risk area, or one-time transactions which are there, unusual transactions, wherever management override can happen, all such areas needs to be identified, evaluated upfront. If there is any difficult or contentious matter, if any consultation is required, that needs to be evaluated and factored in upfront. And any other matter which the engagement partner may feel that this is some area where things are not looking fine, or there maybe there is transactions, there is outflow of money happening. All such areas, based on his practical experience, he might have certain inputs and insights which may need to be factored in upfront. Again, what has been the observation generally, in these inspection reports, that the review comments or observations which were there, those were not resolved or were not actioned upon and not documented, which is very important that if certain reviews were carried out, then whatever was the outcome of such reviews, this should be factored in while planning your corrective actions and should get documented in your files. So as we were mentioning consultations, so if there is any specific matter which is difficult or contentious in nature, then you may want to consult with maybe others in the engagement team itself. If there is a senior who has done, if you are auditing, let's say, revenue, but you have never audited it, and other person had done it for prior period, you may want to understand from him or her. So similarly, if there is some transaction which XYZ person had dealt in another audit, another partner had done, you are doing real estate for the first time, other partner had done it in the previous or in the past, so you may want certain insights how to do such audits. You may want to even interact someone outside the organization, that how such audits, what insights can be gained in that regard. Again, where firms lack certain resources or experience or expertise, I would say, then they may want to consult outside the firm if the requirement so exists. So especially this is more to do with the usage of experts, right? So if you have huge actuarial balance sitting in your books which you're auditing, you may want to not rely only on the management's expert. You may want to get another actuary to look at the actuarial evaluation report. So in such case, you may want them to carry out an independent check and see whether they are arriving at the similar conclusion or not. Again, when you are doing such consultation, all the relevant facts needs to be shared with them. So whatever information is required or has been considered by the management or by that particular management expert, you may want to share it when you are doing such consultations. Again, the nature and scope and conclusions which is resulting from such consultation needs to be agreed upon between the engagement partner and the party being consulted. So which elements you want them to look at. So for example, as I was giving an example of these actuary reports, right? You may not want them to look at the arithmetical accuracy or the disclosure, right? That is your responsibility, your team is taking care of it. So you may want to exclude it. So that will not be within the scope of that particular expert. You may want him to look at only valuation, whether the approach is used is correct or not, whether PUC method has been used, whether the formulas which he is using to compute such balances is appropriate or not. So those needs to be factored in, and that should get documented. That is very critical. Again, if there is an observation which is there based on such consultation, how you factor in your audit that it is not, that particular balance is not misstated is something which you need to evaluate. So if you need to carry out additional audit procedures, you as an auditor need to plan for it. Next is on the EQCR when we talk about engagement performance. Again here, as we mentioned, all listed engagement audits, if you're doing especially audit of financial statements, you need to have an EQCR. And if your firm has an SQC policy, wherein they might have identified certain particular engagements where they want you to have an EQCR check, then in all such cases the EQCR should get appointed upfront. Again, the EQCR reviews which is being carried out, that should be carried out in a timely manner. It shouldn't be only towards the end of the audit. As I was mentioning earlier, you should plan in advance, discuss with them at the time of, once you're fixed on, the audit approach or your audit planning, discuss it upfront with the EQCR, agree upon that particular plan. In case they have any suggestions, so that you can factor that in, so that the team can execute the audit in that regard. And there are no last minute surprises in that regard. Again, it is required that the EQCR reviews the audit documentation relating to any significant judgments the engagement team might have made and the conclusions reached. So again, the engagement team might be applying judgment, right, in various stages throughout the audit. So for example, they will be applying judgment when they are determining materiality, how materiality has to be determined for the audit engagement, what factor they will be considering, what benchmark they will be considering. All such things will be the places of judgment. What should be your significant risk area, what should be your low risk area, what, whether you're going to carry out analytical procedure, whether you're going to carry out test of detail procedure. These are all places where, there is judgment being applied by the engagement team. So again, the EQCR is required to focus and evaluate whether, these judgments are appropriate or not. The EQCR is required to carry out an objective evaluation of the judgments used and the final conclusions which has been reached in this regard. So again, another area where judgment is used is obviously identification of key audit matters, especially in listed client audits. You would have seen these key audit matters, right? So again, judgment has been used there on how they identify key audit matter. So whether that was appropriate in that particular audit or not needs to be checked by the EQCR, whether that judgment was appropriate or not. Whatever matters arise out of such EQCR review, whether there is any observation, whether there is a change in approach suggested, whether there is any additional procedures suggested by EQCR, then all such matters should get discussed between the EQCR and the partner. It shouldn't be that the manager is discussing and trying to close out things with the EQCR. It should be between the partner and the EQCR, because it was post your engagement partner's review that the review of quality check was being carried out. So if any issues are there, it should get highlighted to the partner, because similar issues might exist on other engagements, or it might give rise to other issues as well. Again, as we were mentioning, this EQCR review has to be carried out before you issue your audit report and after your partner's review date. Once your partner has reviewed it, but before your audit report is signed off. So it's very important that it is not just a check in the box, it is actually carried out. This is a specific requirement under the standard. Again, wherever you have listed company audit and where you are doing audit of financial statement, EQCR, as we discussed, has to be carried out. Now these are the various things which the EQCR has to mandatorily look at when they are doing listed company audit financial statement review. So they need to evaluate whether the firm's independence in regard to that particular audit engagement is fine or not, whether wherever there are any matters for consultation, whether the engagement team has gone for appropriate consultations or not, wherever there was a requirement to involve experts, whether the experts were involved or not, whether the fraud related areas has been identified correctly or not, appropriate procedures has been planned or not, again significant risks, whether that has been identified correctly or not, procedures again relating to mitigate such significant risks, whether that has been planned or not, any judgment which has been applied to determine the materiality, whether that is appropriate or not, how the team has disposed of the corrected and uncorrected misstatements, right? That whether it has been disposed of correctly or not and concluded finally correctly or not, because it will have a direct implication on your audit opinion. Then again, matters which are communicated to those charged with governance, right? Which includes your CAM communication, key audit matter communication. So whether those communications are appropriate or not. And if any regulatory requirement is there to communicate, if you have a fraud reporting, you are required to communicate to NCA and so forth. So whether such communications has been done appropriately or not. So again, you may want, if you find any such issues or requirement where you need to have an EQCR on other engagements, you may want to have similar reviews by the EQCR on such engagements. This is the last aspect of engagement performance, wherein in case there is any difference of opinion, whether between the engagement team members, between engagement partner and engagement quality control reviewer, anyone, then it cannot remain unresolved or undealt. You have to get it resolved, you have to deal with that particular difference of opinion, and it will be mainly in line with how the firm's policy is in such matters. So usually it gets dealt in your SQC 1 itself, how your SQC manual has been defined. This is the last aspect, or the fifth aspect of this particular standards requirement, monitoring. So I'm not sure how many of you, if you are from a fairly large firm, then you would know that they would have a monitoring mechanism in place. Sole proprietors or smaller firms may not have this monitoring mechanism in place. They would rely more on peer reviews being conducted. So whenever you have these monitoring mechanism, whatever is the outcome of such monitoring mechanism, wherein your completed audit files are reviewed, in such cases, whatever is the observation out of such reviews, be it partner specific, be it firm specific. So if there is a firm specific issues which has been noted, then there might be a communication which would have been made to all the partners that these issues have been noted based on peer review or practice review, the various inspections which has been carried out, and accordingly there will be a mitigation plan also which would have been agreed with all the partners. So if let's say the firm was not using, let's say ICI has given a materiality computation tool. So if the firm was not using it in the past and they were applying random numbers or random benchmarks, there was no uniformity, and that was highlighted in maybe peer review as one of the suggestions for improvements, then the firm might decide that going forward they would want to implement it. So it is the responsibility of the engagement partner to see all such inspection reports and ensure that this is implemented in all their audits. They educate their team members that all such tools and all such observations are actually carried out. Similarly, if the file of that particular engagement partner was subject to peer review, practice review, or any inspection, again what happens there is, if certain issues were noted with regard to maybe the review mechanism of that particular partner, or certain insights were shared with him based on the reviews, then he may want to factor such things in his audits. So again, till now, if you have any questions with regard to the 5 aspects which we have dealt with.
This EQCR is listed, applicable only to listed or in larger organizations?
So mandatory it is for all the listed clients, and as per your firm policy, so if your SQC has defined that you will do it for all public interest entities as defined, then you may want to expand it there. So it will depend on your SQC policy.
This EQCR operation should be conducted after completion of audit, or it should be applied simultaneously?
It should happen simultaneously. You have to plan. So the EQCR should be identified at the, once you have accepted the client, you should have identified at that point in time who will be your quality control reviewer. And you need, once you have decided what your audit plan should be, when you are discussing it with your engagement team, you may want to involve the quality control reviewer also, so that he can share insights and you can agree upon the plan with him. And then you can agree upon when he will review. After your, if you as your engagement partner, you might plan to review, let's say on 10th, you may want to give it to him on 11th or 12th, so that you can sign off by 15th. So that way you have to plan. It has to be before your sign off.
A lot of these are cultural aspects also, right? For example, the seniors training the juniors, etc.
Yeah.
Is this supposed to be documented somewhere, and how do you bring it? Is it okay if it's just an oral thing, right? Or it should be mandatory?
So it is suggested you make it as part of your audit planning discussion, so that you are saying that at least help the people responsible, that who will educate who. Like if you have juniors, first year articles, you may want to hold the qualified people educating these articles, or you may want them to review the work of these articles. You may also want to like if you have done any specific training for any area, that will be covered as part of your SQC at firm level. You would have had firm level training, so that will get covered there. But from an engagement per se, if you have any specific requirements, you get it covered under your planning discussion, is what is suggested. Okay. So from a documentation front, This standard requires two levels of documentation. One is at individual engagement level, the other is at an overall firm level. So when we say at individual engagement level, again, there is two requirements. One is by the engagement team, and one is by wherever you have an EQCR. And overall firm level deals with mainly monitoring, I would say. So if you were to look at from an engagement team per se, you need to document any issues which has been identified and how it was resolved with regard to compliance with ethical requirements. If you remember the slide on relevant ethical requirements, the partner had to sign off and keep some documentation in your audit file that he was satisfied that there were no ethical issues noted based on his inquiries with the engagement team. So this is a specific requirement under the standard and it needs to get documented. And as I mentioned, these inquiries needs to be carried out not just at the planning stage but towards the conclusion also, that it has not been impaired during the period of audit. Similarly, from an independence front, in specific you need to have this conclusion documented and that the auditor or the engagement partner was satisfied there were no independence issues noted based on his inquiries with the engagement team. And at the firm level, any which ways there would have been an independence check carried out when you would have accepted the particular client. And if any issues were noted during the period of audit, you should have, as engagement partner, should have communicated it to the firm, the firm who is responsible for such matters. Then again, any conclusions, the final conclusions which would have been reached with regard to client acceptance and continuance and acceptance and continuance of the engagements, that needs to get mandatorily documented. Again, engagement partner has to sign off on that these conclusions were appropriate. Again, the nature, scope and conclusions of any consultations which were undertaken for any matters which were critical or contentious, you may want to include those in the file as well. This is, without say, work not documented, not done. So you have to ensure the bare minimum documentation is available in your files. And if you look at the last 2-3 NAFRA orders, you will actually note that they've called out SA 220 in specific non-compliance with SA 220 in their reports. Again, this is the requirement for documentation from an EQCR standpoint. Wherever you have an EQCR, they need to mandatorily confirm these three aspects, that whatever procedures would have been defined as per the SQC policy of the firm with regard to such EQCR reviews, whether that has been actually carried out or not by him. So as we had discussed, right, those particular aspects, if you are doing listed company audit, you had to mandatorily review those documents. That is required as per the standard. So that to mandatorily he has to do. But if the policy of the firm says that he has to also look at XYZ things, specific work papers of, let's say, management override and so forth, he may want to do that. You may not be able to escape in such cases. Again, whether the EQCR has been completed on or before the auditor's report date. This was one of the questions. So he has to mandatorily sign off that yes, it was actually carried out before the auditor's report date. Then again, he has to mandatorily sign off that he is not aware of any unresolved issues that would cause him as a reviewer to believe that significant judgments of the engagement team made and the conclusions reached were not appropriate. So if the EQCR believes that the materiality which was determined was not appropriate, or the benchmark which was used was not appropriate, he can call it out here. So you need to be in sync with your quality control reviewer. You have to reach a consensus. You cannot leave it open. It has to get closed. And again, work not documented, not done. So this is more from an engagement per se, that you have to ensure that it gets documented. At a firm level, from a monitoring standpoint, your SQC policy would be defining that, how the monitoring would be carried out. So they would have defined how the, partner selection would happen, like how many files per partner would be selected, how many engagements would be selected, when such reviews are carried out. In case you have an in-house, monitoring mechanism, if you have a larger firm. If you are, relying on peer review, then definitely, they will follow the peer review standards. But otherwise, these are the procedures which needs to be carried out. That all the partners are subject to such review at regular intervals. Any issues which are noted, as we had discussed earlier, right? It is communicated to the engagement team, and action points are agreed upon, and remediation action is taken in that regard. And if any learning has to be given to the engagement team in terms of wherever lacunas have been noted, then such things needs to also get planned at firm level. So this is more at firm level that they need to carry out. So any questions that you may have?
Of the slides, you had mentioned that audit report should be dated only after the EQCR's review.
Yes.
That audit report should be issued, not dated.
Not dated. Sorry, my bad. Yes, issued.
Considering peer review is happening, and for smaller firms, let's say, is SA 2220 writing document, or is it mandatory for all these?
So SA 220 is mandatory for all audits. Wherever you are conducting an audit of financial statements,
Irrespective of size and.
irrespective of size, irrespective whether you are a sole proprietor or whether you are.
So only EQCR is the.
Only EQCR is something which you need to evaluate. If you are doing any listed company audit, subsidiary of listed company, any subsidiary of listed company or so, then you need to factor in accordingly. So again, it would be based on your SQC policy. SQC also is, applicable to sole proprietorship firms. So you cannot escape. So as I was mentioning, this particular standard is based on the fact that SQC 1 is applicable, and similarly this is applicable to all the engagements wherever you are doing audit of financial statements. So certain aspects like EQC are mandatory or not, that is determined based on either your SQC policy or if you are doing a listed company audit. That's the only thing.
Reviewer can be other partner?
It can be another partner. Yeah, but he should have the necessary skill, experience and expertise. So you will have to demonstrate that you as an engagement partner were satisfied that he is the EQCR.
So the person who sets the policy also can be EQCR also?
Yeah. There's no mandate, no rule. The only thing is he should be an independent person, not part of the engagement team. So you cannot have within the engagement team, call him a support partner also, and also call him an EQCR. That is not perfect. He will have to question the engagement team. That's the role of the EQCR.
In a case where subsidiary is outside India, how this EQCR can be complied? You are auditor of a holding company, you are responsible for consolidation, where your opinion is on entire consolidated financials. You will roll out the instructions to the subsidiary auditor.
So subsidiary auditor, so again, you may want to call out in the instructions. See, issuing instructions again is more from an ISA front if you look at it. So again, ISA requires you to carry out EQCR only in case of listed companies. And again, it has certain specific requirements. So again, you will look at from that front, and in such situation, you may want them as per their SQC policy to carry it out. So you will leave it on that particular firm, and based on your inquiry with that firm, You are permitted to have inquiry with that component auditor. You will inquire with them that what is your policy. Whether you carry out a quality check. What is you may want to even look at their inspection reports if they have PCOB inspection and so forth, or any similar concept of peer review and so forth. You may want to look at such inspection reports. That and they will readily share. If not share the reports, at least they will tell you what were the observations, if any. But that should get documented again. If you're performing such inquiries, etc. How you as an auditor got comfort over such process, you should document it. I'm again talking from an ISA part, not from Indian standard per se. Because here it is not mandatory.
So rolling out an inspection is not a mandatory.
Because if you are a chartered accountant and a chartered accountant, it says you can rely on the work.
From that perspective, yes, I'm speaking from a cross-border relation.
So cross-border, again, that's why I said ISA becomes applicable.
Yeah.
So there you will look at more from an ISA standard per se. ISA mandatorily requires you to send instruction.
Yeah.
There you don't have an option. Here you have an option whether you want to send as per ISA or not.
Yeah.
You are doing additional procedures from an India practice if you get it.
No, I'm only focusing from a cross-border. Yeah.
There you have to do. You don't have an option. Any other queries? So most of the observations, whatever is there from an, if you pick up any NAFTA report, you will notice that, they have covered all these 5 aspects. 100%. If there is an EQCR, it would have been called out. If there is a client acceptance, it would, obviously client acceptance related, you will find most of the reports they are calling it out these days. Either there is an issue with regard to NOC, or there is an issue with regard to independence of the client and so forth. Ethical requirements, again, at the client, at the time of acceptance of the client, or during the course of the audit, there was an independence impairment which was noted. Again, performance per se, you will see that adequate procedures were not carried out by the firm, wherein they did not either carry out additional procedures, they did not modify the nature, timing, extent in case of observations and so forth. So those observations will be there. And EQCR, you would get to know in the order itself, they would have penalized them or debarred them. So, any other questions? Okay. Then thank you so much for your time. It was thank you.
Thank you, Shristi, for coming and sharing your knowledge with us. On behalf of Bengaluru branch, we thank you wholeheartedly. I request our chairman to hand over the moment to